Well, good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder, and this is BRN AM for Friday, January 10th, 2020. Well, here are our top stories. North America sees the biggest investment in blockchain and cryptocurrency in 2019. And also, we'll take a look at the latest on crypto legislation in 2020. Well, let's welcome in Kevin Kelly. He is the co-founder of Delphi Digital, a cryptocurrency and blockchain research firm. Kevin, great to have you back in the program. Happy New Year.
Thanks for having me back. Happy New Year to you too, Jeff.
It's great to see you. So 2019 was a volatile year in markets. I suspect, but I want to find out what happened in the cryptocurrency and blockchain arena in 2019.
Yeah, so interestingly, if you look at kind of the publicly traded crypto market, right, Bitcoin being the most kind of prominent asset in that asset class, you've gotten a lot of talk, around just traditional investing circles about, the performance of risk assets recently, notably stocks. I mean, the S&P 500 even today is now breaking again to fresh all-time highs. But if you actually look back at the year-to-date performance over just 2019, in 2019 in general, actually Bitcoin was one of, if not the best performing asset class out there. And it's interesting because it was kind of a tale of two halves of the year. The first, 6 months of 2019 was really characterized by this, Federal Reserve and global central bank pivot in terms of monetary policy towards more dovish policies, interest rate cuts, more stimulus being added into the banking sector. And then the latter half of the year was kind of this pivot away where the Fed started to get a little bit more cautious in terms of some of their outlooks, some of their commentary. And you really saw, Bitcoin rise as high as 250% through, the end of June or late June. Wow. And then had almost a 50% drawdown from, pretty much the end of Q2 through the end of the year, right? And we saw some volatility pick up here towards the end of the year with a bit of a sell-off. So it was really an interesting kind of tale of two halves. But all in all, Bitcoin still was one of the best performing assets in 2019.
And so, a lot of people lump in Bitcoin kind of representative of cryptocurrency. And there are many different types of cryptocurrencies, but Bitcoin has to be one of the more higher performing cryptocurrencies that exist today.
Yeah, no, it certainly was. And when you looked back, I mean, you had that kind of what we call the ICO or initial coin offering boom of 2017 that really kind of brought in a lot of retail speculation, retail investors. And during that period, you had a lot of these kind of smaller crypto assets that were providing, in some cases, 50, 100x returns. And that wasn't something that Bitcoin is kind of that you could think of as like the mega cap crypto wasn't providing. But now I think, as you've seen this market mature a little bit, you've seen the investor type who's getting into this asset class mature and become a bit more sophisticated. People are kind of starting to get, especially on the institutional side, need to get comfortable with the Bitcoin allocation first. And so when you have institutional capital moving in, you would expect them to go into something like Bitcoin first before really kind of diving, deeper down that crypto rabbit hole. And so if you think about it from that sense, it actually makes, a lot of sense that, the larger cap cryptos, especially something like Bitcoin, would really kind of lead the march higher because again, the investor base, while it's still very heavily retail driven, is certainly starting to shift a little bit towards some more institutional involvement.
And when you look at investment, because investment, when I say investment in infrastructure, investment in using blockchain technology, and I know I shouldn't necessarily lump blockchain in with crypto, but they do use some of the same underlying fundamental infrastructure. There's a tremendous amount of worldwide investment. So clearly, people around the globe, with the most being concentrated here in North America, people around the globe see the benefit of tokenization, blockchain, ledgerization of currency.
No, absolutely. And you bring up a really good point because, what I've talked about so far is the kind of publicly traded side of things. But on the private side, when it comes to a lot of the VC deal flow that happened, in 2019, came off a little bit from 2018 in terms of the actual number of deals and the total amount that was invested in we'll call it the crypto blockchain sector. But when you look at kind of the top deals, I mean, a lot of that was focused on, again, the infrastructure that you're talking about, really, primarily focused or centered around things like exchanges, right? Which is, you can think about, crypto exchanges is basically the way in which, people are able to exchange one crypto for another, right? Because a lot of these things aren't necessarily regulated, and it still is a bit of the Wild West. But those are some of the companies where I think as you get into this tokenization movement, a lot of people are still trying to figure out, ourselves included, trying to pioneer different valuation frameworks for looking at these different things, whether it's a token itself, the company or the project that's supporting the token, things of that nature. When you look at something like a crypto exchange, those are some of the most profitable firms that are actually out there, right? If you look at something like Binance, that they are extremely profitable compared to, some of the alternatives. And so I think investors coming in are trying to play the blockchain crypto movement as kind of building out the infrastructure, investing in infrastructure, and things they can actually wrap their head around from a valuation standpoint.
And I don't want to spoil our second segment, which really focuses on legislation and regulation. But this year, or last year, I should say 19, we did see the Internal Revenue Service, I think, lay out taxation principles or regulations. I'm not sure what the correct terminology is around that. So that, to me, just being a layperson from the outside looking in, looks like it adds some additional structure. There are some things being thought about at the highest levels of the U.S. government, but I would imagine throughout sovereigns around the world.
Yeah, no, absolutely. And regulation is kind of has a funny way of making its way into, not only market price action, but even just kind of investor sentiment. A lot of people, again, when you think about where this movement started with kind of I won't say you're more kind of crypto anarchists, but people that were certainly more kind of tech focused, developers that were trying to upset the established system. When you talk about regulation, sometimes it has a negative connotation, but to us, we don't really think you're going to see, obviously, this large mass adoption of this large scale institutional involvement or investment until you actually have the regulatory structures in place that allow, more sophisticated investors to come in and actually make significant capital allocations to it. So again, it's a double-edged sword, and there are certain things I think that, especially here in the U.S., maybe our legislators could do a bit of a better job of in terms of how they're crafting some of this legislation. But all in all, I mean, adding structure to this space is certainly, a net benefit long term.
Yeah, and I don't know if this is the right word, but it adds kind of legitimacy. Like, okay, this is a market, the market's evolving, and this is what we need to do to framework it so that it can be used. Kevin, we've got about a minute left in this segment. Let's talk about 2020. And I know a minute doesn't do 2020 justice, but we're going to have you back in the program throughout the year. But what can people who are watching the program, who are just on the sidelines, maybe hearing about crypto, what can they possibly expect in 2020 here and going forward?
Yeah, I mean, I think crypto at large, I'll stick with Bitcoin now just because it's probably got the strongest narrative going for it right now. And I think the big themes that we're watching for is one, escalating or even elevated geopolitical risk. We've seen that between the U.S. and Iran just even kick off 2020. And you've seen actually some pretty positive price action in Bitcoin, as a result of that or in part because of that. But I think you're looking for geopolitical tensions. And again, this movement, a bit away from looser monetary policy. Mm-hmm. That's, I think, what's kind of kept a cap on Bitcoin recently. But if we start to get into a situation where, growth expectations fall off a cliff again, or we don't see that reacceleration in economic growth that a lot of people are calling for now, you could potentially see, the Federal Reserve and other central banks come in, provide additional monetary stimulus, cut interest rate further. And again, in that type of environment, hard assets like gold and Bitcoin certainly should perform well.
Yeah, well, we're certainly going to keep our eye on this and have you back on the program throughout the year to talk about this. When we come back, we're going to go to break. When we come back, we're going to talk to Kevin about some of those regulations and some of the legislation that he referenced in this segment. So stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network. Welcome back. We're talking cryptocurrency, and who better to do that is the co-founder of Delphi Digital cryptocurrency research firm, Kevin Kelly. Kevin, thanks for sticking around with us this morning.
Absolutely. Thanks for having me.
Yeah, I mean, it's been an amazing year for digital assets and blockchain. So, really important to get your opinion on this. Let's shift gears a little bit. I want to talk about regulation, legislation. We talked a little bit about that in segment one. Before we jump into what's happening on the Hill, as in Washington, D.C., beyond some of the things we read about and hear about on a daily basis, yesterday we had Tucker Piner on talking about the definition of accredited investor and how that may change under the Securities and Exchange Commission proposal. I want to get your thoughts on that and also what the SEC might think with respect to crypto.
Yeah, I mean, I think it's definitely, crypto aside, I think the accredited investor rules right now are certainly a bit arbitrary. And I know we've talked about this on your podcast before at quite a great length. But I think, bringing it back to the crypto space, it certainly needs to be a net positive because, again, it gives, a larger investor type, so to speak, access to potentially investments, early stage investments that can really contribute to, building wealth over the long term, right? Yes, you can build, significant nest eggs by investing in your traditional asset classes like stocks and bonds, and even playing, some of the alternative investments. But I think, allowing people to get into some of these kind of private placement deals early on, again, with the proper regulation in place in terms of, I'm much more in favor of not necessarily having these arbitrary, kind of net worth or net wealth rules, but something that is, if you take a certain test and you have a prereq that signs off, or you're able to check a box saying you are an accredited investor because you understand, not only opportunities, but really more importantly, the risks of investing in these types of spaces. I think you should be allowed to be able to obviously put capital and if you understand, the risk that you're taking on. And so I think, the SEC certainly moving in the right direction there. Could certainly be a big benefit or boon for crypto as well, because one of the kind of key catalysts I think for 2020 is to get more regulatory clarity, and certainly when you kind of lower the barriers to entry and allow for larger, again, types of investors or a larger array of investors to invest in this space, it certainly can only really be a boon or a catalyst for the crypto industry in general.
We talked about the Internal Revenue Service. You talked about some of the regulatory hurdles in segment one, or things that were happening around the environment. Let's talk about what's going on the Hill. When I say the Hill, I mean Washington, D.C. Lots of different committees, lots of different bodies, whether it's the U.S. Congress or the U.S. Senate, taking a look at cryptocurrency from a lot of different points of view. Can you give us an idea of what's being discussed and where things stand?
Yeah, a lot of, I think, the regulatory conversation right now stems around a couple of different major points. I mean, one is you're looking at Congress, but also kind of the pairing it with the Federal Reserve. Obviously, the rise of cryptocurrencies as, a challenge to the established order, right, in terms of monetary policy, and the fact that when you think about the Federal Reserve and the U.S. government, and they essentially have a monopoly on, the U.S. dollar, and the dollar being the global reserve currency certainly warrants a lot of power, maybe some unwarranted power. They look at something like Bitcoin, and maybe they don't fully understand it, but they look at something like Bitcoin as a challenge to that dominance or that monopoly power. And so certainly anything that threatens them, they're going to kind of come out and be defensive about. But the other thing is also when it comes to kind of your anti-money laundering, your AML type of rules, and looking at obviously terrorist financing, those kind of extreme examples, anything that can help foreign citizens potentially evade sanctions. Those are the types of things that the U.S. regulators are going to have pretty much zero tolerance for, right? And for good reason, absolutely. So I think what you're starting to see is a lot of focus being put on things like privacy cryptocurrencies, right, which essentially use different forms of cryptography and have different mechanisms built into them that essentially makes it so that the transactions are shielded, right? So you can't actually tell who's transacting, how much they're sending, things of that nature. And when you think about the transparency that the U.S. government's going to demand when it comes to something like a digital currency, that certainly kind of goes or is an opposite to what they're trying to get at. So I certainly think that's where the regulatory stance or pressure is going to be most obvious.
Yeah, I think you bring up an interesting point, and you talked about the geopolitical issue that came up earlier in the week and last week between Iran and the U.S. Funding of terrorists has certainly been a concern, at least since 9/11, probably a lot before that, but we have rules in place with the anti-money laundering and the Patriot Act, et cetera, that to help prevent that. Digitalization, and that seems to be very important for maintaining the protection of the sovereign, in this case, the United States. How concerned are people that you talk to about hacking, scams, people invading these exchanges? And you do hear about some bad behavior that goes on. We've read about that in the press in 2019.
Yeah, no, and it's a legitimate concern, and to be honest, I think it's going to continue to be a legitimate concern for this foreseeable future, and that's just based on the kind of blessing and curse that is crypto and kind of the nuances around self-custody for crypto assets. And without getting into the technicals around it, a lot of the exchange hacks you're referring to are basically caused by people leaving their cryptocurrency sitting or crypto assets sitting on an exchange in what we consider to be called hot wallet. So it's not cold storage that you may be familiar with, which is where you're literally putting your crypto assets on a device that hasn't touched the internet, and you basically store that away. And so these being kind of pseudo bearer assets, it basically means that no one, that's the security aspect of it too, and that no one can really kind of confiscate that type of investment or that type of wealth that you're storing. But again, with that type of privacy and security, it also comes with a ton of risk, because there are, if you're not technically savvy, there are a lot of ways in which you can mess up that process and lose your crypto assets within the process of trying to store them. So I think that's going to be a legitimate concern. I mean, part of our job is obviously in large part education for a more institutional type crowd, but we also have some sophisticated kind of high net worth individuals who we work with and talk to them about the proper process procedures to put in place to help store your wealth, things of that nature. But the education aspect is huge, because if people don't necessarily know what the risks are of leaving their Bitcoin or Ether on a crypto exchange, and that crypto exchange is hacked, oftentimes there's not a ton of recourse that person is able to really bring against the exchange that's in question.
Yeah, we've got about a minute left in this segment, Kevin. What about Facebook's Libra? What about Fidelity getting in, offering, I think, an exchange? What can we take away from some of these bigger organizations coming in? Is that more of the future, or will we still see smaller startups continue to percolate here?
I think when you think about what Facebook's Libra is trying to do and the scale that it's trying to do it at, I don't think you'll have smaller startups that are able to come in and create some type of global medium of exchange that pools together different fiat currencies and kind of short-term debt instruments. I just don't think that they would have not only the financial capital, but kind of the status to be able to do something like that and coordinate all those different early investors and partners that Facebook's Libra has been able to claim, at least. But what I do think one of the kind of biggest trends from that is going to be the rise in 2020 is going to be a big theme, is the rise of central bank digital currencies, right? We've talked about, a digital Chinese yuan. You also had the Fed at least talking about now potentially investing resources to try and just at least research how that could potentially be. And I think this is just a trend that has too much momentum now to kind of go backwards. And I think 5-10 years from now, a digital currency, especially the major currencies, I think everything is going to be pretty digital, and it's going to be something that in hindsight made a ton of sense, but right now seems a little bit questionable.
Yeah, I got to think that this is the same way that hedge funds, private equity, private debt, and other real assets, private markets, were created many, many decades ago. Kevin, always a pleasure chatting with you, and look forward to having you back. Well, I always look forward to talking with you in general, but having you back on the podcast and looking to have you on the program, this program again, very soon. Have a great rest of the day. Have a great weekend, and we'll talk to you soon.
Absolutely. Thanks so much, Jeff.
And that wraps up this episode of BRN AM. But we're not done for the week, because tomorrow we have BRN Weekly, our retrospective and look back show at the best stories for the week. And also, don't forget to read today's edition of the Morning Pulse for all the latest news in retirement markets, technology, personal finance, and so much more. So until tomorrow, I'm Jeff Snyder. Keep on saving, and don't forget, roll with the changes.
Waiting here for you to take and drink of. But if you're tired of the same